Hello, everybody, and a very warm welcome to today's webinar, brought to you by sharedserviceslink and sponsored by Vertex. Today, we're going to be looking at a business case for tax automation that CFOs will actually read. My name is Sarah Fain, and I am the head of content at sharedserviceslink. And I'm delighted to be joined today by Peter Boerhoff, the VAT director at Vertex, and Roger Lindelau, the director of the SAP Center of Excellence at Vertex. You, of course, have an important role to play in today's webinar as well, and that is just to make sure that you get the most out of your time here. We encourage you to ask us questions. Peter and Roger are some of the most knowledgeable people I know in this area, so please take the opportunity to submit your questions. The best way to do so is using the question functionality, which is usually over on the right-hand side of your screen. Just to preempt some of those common questions, we will be sending the slides to everyone who's on the webinar today. That and the recording will also be available on our website, sharespace.digital. We will be sending CPD, certificates of attendance, to people. That usually comes in about 28 days, working days of the webinar. And just a few things about engaging with the content. We'd love to see you here. We might not be having live events, but we do have these great virtual events. So if you like it, engage with the content, ask us questions, and one of the best things you can do is chat to us and share on LinkedIn as well. Let your colleagues know. And if you stay to the end, we have an extra little bonus in that we are going to be giving away $175 or currency equivalent to a charity of your choice, to a lucky listener who stays to the end of the webinar. So we'll be checking the timestamps. So if you stay to the end, you'll be in for a chance to donate to a charity that is close to your heart. So just to give a little bit of agenda and context before I hand over to the experts today. It's not just businesses which has been digitally transforming over the last few years. Tax authorities have been doing it as well. And I think if you're on the webinar today, you'll probably be aware that investing in the right tax technology can help you not only ensure compliance and reduce costs, but it's essential to help your business really stay afloat. But it can be difficult to get on the CFOs and the CEOs agenda. So today we're going to be looking at how to build a business case for automation and how to make it attractive to the CFO, CEO, and IT. So with that, I would now like to hand over to Roger.
Yeah, thank you, Sarah. A very good introduction. Welcome everybody to this webinar. I hope you will find this very insightful. Peter will start the webinar later on with the intangibles, indeed, and then I will later on take over with some numbers and figures that you can use to actually calculate a business case. And let me see if I can move the slides. Yes. So before Peter will start, I will hand over back again to Sarah to do first a poll about some questions that we have to the audience, and then we will start with the webinar.
That's great, thanks. So coming up on your screen now is our first of two poll questions, and we want to understand if you have designed a business case for indirect tax automation. So have you done a business case and it's been successful? Have you maybe done one but it's not been approved yet? Are you perhaps working on one now, or have you not yet designed a business case? So great to see lots of you participating. We will be sharing the results shortly, so I'll be closing the poll in 3, 2, 1, and the results should be coming up on your screen. So responses across the board here, really. We can see that 25% of you have done one successfully. 17% have done one, but it's not been approved yet. 25% say that you're working on one now, and 33% said that you've not designed a business case yet. So lots of you on different ends of the spectrum here. So hopefully there's still value that you'll find from Peter and Roger wherever you are on this journey. So let me just quickly hide this, and back to you, Roger.
Yeah, back to Peter.
Back to me. Thanks, Sarah. Thanks, Roger, for the introduction. And indeed, interesting results from the poll. It's good to see that the majority has the business case at least on the radar screen, and some people have not yet designed. We believe for everybody there's something in it. And basically the first question when you start considering tax automation and start thinking about a business case, okay, do you actually need one? And especially, I'm a tax professional by nature and by profession. I've been in the vet practice for many years, and you see and are confronted with a lot of issues and challenges, either direct or indirect through finance operations or people in supply chain, and that, let's say, creates the image that you have of your business. But the question is, well, okay, is this generic or is this kind of incident? So the picture that you have in your mind, is that what you feel and what you believe is true for your whole organization, or is that really what you know that is true for your whole organization? So do you have a realistic picture? That is basically the first challenge. So in order to basically say, well, okay, to create this realistic picture, you actually need to go through a scan of your organization and primarily your systems. What's happening with the transactions in your financial systems? Are they processed correctly? If you have manual AP, that's also part of it, but also to check, well, okay, are my system settings correct? Do I have the appropriate tax codes? Are the tax codes applied appropriately? Etc., etc. Many of you can think of many potential issues in the system, but through such a scan, you can basically create transparency and really know what's happening in your business. And if you do a thorough scan, so you can do a quick scan, you can do a more thorough scan, you might also be able to quantify part of the risks that you've identified in your organization, which can be beneficial as well for building the numbers and the tangible aspects of the business case that Roger is talking about later on. You will then also know through such a scan whether some of the issues that you're aware of or that you've identified, whether those are incidents or whether they are more systemic. And if it's more systemic, it's kind of a fundamental issue, but incidents can just be, yeah, human errors when, for example, implementing data, or a human error creating incorrect master data. And you will have insights in, okay, what's actually the root cause of the issues, and then you can start thinking about solutioning. If you've not discovered, let's say, any systemic structural issues, there's no really need for a project. You still maybe need to resolve a couple of things, but that's more incident handling. But if you come to systemic structural kind of issues, you should seriously consider a project to cure the system. And then you start solutioning and decide, well, okay, I need tax automation, I need to outsource compliance. And of course, we say, well, okay, you need tax automation, and then you start, only then you start building a business case. If you can go to the next slide, Roger.
Yeah.
If you start considering a business case, it's important that you understand, well, okay, what's the bigger picture within my organization, and where does VAT or transaction tax fit into the overall bigger picture? And then you have to match or try to match your agenda with agendas of, let's say, the stakeholders in your organization. So typically that's finance, IT, the rest of the tax department, but also your CFO, who's more at the strategy level. You need to align your priorities, your issues with the issues and challenges that others are facing, and quite often that will be either in finance or in IT. And you will likely identify overlaps and synergies. And if you've identified these overlaps and synergies, you can start creating alliances. You can bond with these people. You can create a case together instead of being isolated and being alone. Instead of being this a VAT challenge or an indirect tax challenge, it becomes a joint issue and also a joint solution for the people that you've allied or bonded with. We typically, as tax professionals, tend to look at finance, and nowadays also to IT, because everything is ruled by the systems and by SAP, and Roger will talk about that. But we should also look at, well, okay, how can we maybe benefit with our possible solutions? How can other departments benefit, like, for example, supply chain, procurement? Those are also important players in the overall arena. If you go back to the next one, Roger. Then if you've created these alliances, you know who your stakeholders are, then you really start to work together. You really need to discuss, well, okay, how do we approach this? And here I use the example of finance, tax, and IT. And really, tax, indirect tax is guiding towards, well, okay, what could be an appropriate solution? What are the issues towards compliance? Of course, we definitely need the support of IT, because we always say it's all in automation, data, and systems. And in general, a lot of the budget comes from finance, and finance for me also includes the CFO. And in many organizations, tax, finance, IT, they also report into the CFO. So that's at least that could be a benefit. Next slide, please, Roger. If you work on change, if you work on the business case, if you seek those alliances, it's good to bear in mind that on a high level, there are three angles or drivers for change. And the first one from experience is to try to keep the organization out of trouble. And yeah, sometimes you hear the argument, well, okay, what was the last tax audit that we've had? What was the financial impact? That's usually not very helpful, especially not if tax administrations are understaffed. And this is also where your analysis that you did before can come in handy, because you can really prove, well, okay, we have an issue, and you'd rather keep your organization out of trouble instead of first facing the trouble. But it can be a challenging discussion. The second one is to create efficiencies, make your organization better. But the question always is, well, okay, how do you do that? Where can you improve? And to what extent is it really needed? You can coordinate risk activities. You can optimize your controls. You can create efficiencies through the use of technology, but where do you start and where do you stop? And the third one is, okay, future-proofing your business, looking into the future. What's coming from a tax perspective? And the future is always uncertain, but it's good to have this on the radar and make sure that that you're ready for this and that it's part of the discussion. Next slide, Roger. If you look at the agenda of tax, the wider tax organization in an organization, there's quite often an ambition to add more value. So to move away from transaction processing, which to a great extent can be automated, and to move away from, let's say, routine reporting, and really invest and develop capabilities in your control and in your planning activities. And through automation, you can do that. You can reduce the effort that people have to spend in transaction processing and reporting, and you could put that freed up capacity into increased controls and increased planning and decision support. But also here, you will likely end up in discussions, well, okay, to what extent do we invest in these capacity for control and planning and decision support? And to what extent do we assume the freed up capacity can actually be a cost reduction in transactions? That's what you see at the right side, where I've scrapped out part of let's say, of the what I presume the added value activities as a cost reduction effort. And it will be a balancing act between creating this system of insights, which is in the middle column, versus the overall cost reduction, which is also very high on the agenda. And it's important to be aware of these dynamics. You go to the next slide, Roger. The next two slides are about, let's say, challenges for tax or things that are on the agenda for tax. And that's just two examples, because for every tax department, every organization, it may be different, and different challenges and opportunities and priorities. The first one that's on this slide is that due to the globalization and centralization of activities, tax as a larger concept, so that also includes your operations, your AP, and your tax reporting. Traditionally, this was all concentrated within a country, within your businesses that were executed locally. And as a result of globalization, you see that these, let's say, control frameworks, have been torn apart, and you need a redesign, because your accounting, your AP accounting could well be executed in India instead of within your local plant. So how do you make sure that usage of your materials is captured correct? And it could well be that your sourcing is centralized, or that you've centralized your tax operations and maybe even your tax department in shared service centers. That requires a different control framework than when you have everything still local. Next slide, Roger. The other trend that you see in indirect tax is an external force, where you see that tax administrations with their controls move into our core finance processes. Traditional reporting is a product of an output of the record to report process. You typically have a month for that, and sometimes a quarter, and sometimes it's even annually. But with the concepts of introducing real-time reporting, the reporting period is actually delayed. That also has an impact on what you can do in your tax operations. And if you go to the invoice clearing mandates that gain popularity nowadays, there's actually no time anymore to create controls in your record to report, because as soon as the invoice is processed, either on your AP side or your AR side, immediately the transaction is also reported to the tax administration. So you really need to embed your tax controls in your core finance processes. So I consider this also quite a significant shift. Next slide, Roger. If you look at indirect tax and the indirect tax end-to-end process, it's actually it's a combination, and these are connected between process, systems, people, or organization. Or maybe you start with people. You say people, systems, processes. It's well, okay, where do you actually start? If you're a process-driven organization, you would say, well, okay, we start with the process, that's a given. Then we seek within the process, what can we automate? And then what you cannot automate, you look at, well, okay, can we maybe centralize these activities, these parts of the processes? And then you look at, well, okay, how do we actually put people into this system? Sorry for that. And then the question also is, well, okay, is this your own people? Do they have the skills and capabilities to still do this work in the changed environment? Or is this outsourced? Do you need to outsource part of these activities? It could also very well be that you start with your people. You say, well, okay, this is a given. We have people at central locations and not in specific countries, and we build our process around that. But nowadays, you see many organizations that are really process focused and really expect the rest of the organization, let's say, to adjust to the process and facilitate the process. And finally, you've made these analysis. You know, well, okay, we know what the process is. We know what our stakeholders want. We know where we have synergies, how we can contribute to the overall agenda. We know what the tax challenges are. We know what we want to solve. And we know what we can automate, where people fit in, whether we centralize or not. Then you start actually building the business case. So you take this all in, you take these intangibles in, but you also take in Roger's tangibles and add to the overall picture. And I will not discuss everything on the slide here, because that will take the full webinar. But you need to understand, well, okay, if you build a business case, how is this actually evaluated in your organization? Is cash flow important in your organization? Is getting things off balance important to your organization? Do you want capital investments that you can depreciate, or does your organization or your CFO prefer operational expenses, so CapEx versus OpEx? It's really crucial to build your business case and see what you want. You also need to include the alternatives. What if we do not automate specific things, but we put extra people in charge? Or you say, well, okay, we're not going to automate and we outsource part of the activity. That's all kind of different angles, but you will definitely be asked to contribute and engage in the discussion about the alternatives. We already discussed the importance of stakeholders. You should take and agree on, well, okay, what are the important parameters? What can we collect within our organization, and where should we make assumptions? And then you really start calculating and building your own story, and then you can also explain it to the stakeholders. So this is a very brief summary of the intangible part of the business case, and Roger is now going to lead you to the tangible hardcore part of the business case, where many people like to dive in immediately, because this is where the numbers are created.
Thank you, Peter. That was a really good story about why you need to have a business case, and especially also who are your stakeholders and how do you convince those stakeholders. But it also very often starts with, yeah, but what are the current costs of VAT in the SAP systems? And if I ask that to customers, and I'm speaking with customers already for more than 20 years about this subject, and I ask them, what did you actually spend on designing VAT in your system, and what do you actually spend on maintaining it? Especially, for example, last year we were talking with customers, what did you actually spend on changing the VAT rate in Germany and in Ireland to get that up and running in your systems? People really look at you and say, we never thought about that. We never really looked at what it really cost designing VAT in the SAP system. It's very often just a given. And that is also one point that you really need to look at, like how can we now calculate what the actual costs are to maintain and build VAT determination solutions in the SAP system. Before we go into that, I will hand over very quickly to Sarah. Sarah will do a poll before we start in this. So Sarah, over to you.
That's great, thank you. So coming up on your screen now is our second and final poll question of the day. And this might involve a bit of brain power. It's what do you expect the cost might be to design and maintain your VAT processes for SAP S/4HANA? So these are pretty big ranges here. Do you think this would be something like less than 50,000 euros, maybe between 50,000 and 100,000, somewhere between 100,000 and 200,000? Do you think that designing and maintaining VAT processes for SAP S/4HANA would cost more than 200,000 euros? Or is this something you're just not sure and you don't know about? Great to see lots of you voting. So I will be closing the poll in 3, 2, 1, and the results are coming up on the screen. So interesting to see about a third of people don't know. So click the unsure and don't know. So when we go into the other ranges, only 5% said they think it costs less than 50,000. The next kind of most popular answer is that people suspect it costs somewhere between 50,000 and 100,000. And then tied at 15% is between 100,000 and 200,000, and another 15% said more than 200,000. So interesting results here. I know Roger is going to go into a bit more detail here, so I'd love to hear your thoughts on that and some more insight from you.
Yeah, thank you, Sarah. So yeah, that was a little bit like I expected, the results that we saw from the poll. You see, indeed, people have the idea that the VAT is handled correctly in the SAP systems, and they estimate the initial build and also the maintenance quite low. That's actually also true for some companies. So if you look at the first point on the slide now, SAP S/4HANA, of course, has some functionality in it already for VAT determination in SAP. You don't have to build everything from scratch. This framework that SAP already has works perfectly for businesses that, for example, only have two parties in the flow always. Either they always are the first party in a sale, or they are the last party in a purchase transaction. And if there's only two parties involved, then SAP normally works fine from a VAT perspective. So designing and building a VAT solution for those companies would indeed not cost so much money. SAP is also designed more for the domestic transactions and also simple cross-border transactions. So if you recognize yourself in that, then your estimation of the initial build less than 50,000 euros, that would be actually an accurate example of a correct calculation. However, if your business is a little bit more complex than the above, then you're talking about business transactions that involve 3 or more parties. I sometimes see business flows with 6, 7 parties involved. And also if you need to design complex exemption rules, and then we are talking about triangulation or an extended revert charge rule or a high seas transaction out of scope for VAT transactions, VAT groups, customer pickups, etc., etc. If you're dealing with that complexity, then unfortunately you can't survive with 50,000 euros or less as an investment to build your VAT determination solution in the SAP system. Unless, of course, you do everything manual, but then you would need to look at your training cost. What does it cost you to train all your people to make the correct VAT decisions? So basically making everybody from a sales order desk person to an AP clerk, make them VAT experts so that they always can take the right decision. That, of course, would also be a huge cost to train everybody up to that. So how does it actually work in the SAP system? And my slide is not emerging. Yeah, now it goes. So if we look at a business case, if you start, for example, with a greenfield implementation of S/4HANA, then you would have a quite a big budget where we are designing the whole S/4HANA system. And in that design, you will see costs for designing the sales process, and you see costs for designing the purchasing process, designing the finance process, etc., etc. But what you very often don't see are the costs for VAT determination. So very often that is just hidden in the sales order process or in the purchasing process or in the finance process. I don't see many business cases or budgets for an implementation for S/4HANA where you actually see a whole line and section about what does it actually cost to implement a VAT in the SAP system. So if you are talking as a tax manager to the CFO and you say, we actually would need to have a tax engine to really automate our VAT determination in the SAP system, if the CFO would look at the budget for the implementation of the S/4HANA system, you would say, there's no cost for VAT. So a tax engine implementation would be additional cost on top of what we already are calculating for implementing the S/4HANA system. And that is where I would like to focus today on, is that really an additional cost, or were those costs all hidden in the current budget? So first of all, we need to ask ourselves, why are VAT determination costs not always transparent? So why, if I go to a company and I ask them, what are you spending on VAT? Why do I not get a straight answer like, let me look into the books and see, here's a line, VAT determination cost me so much per year, or did cost so much for the build. If you do the initial implementation or the migration to S/4HANA, then you very often see that people don't recognize that you need to build something specifically for VAT. Everybody knows that VAT doesn't come fully out of the box from the SAP system, but very often it's perceived like, it's just a part of the sales process. So there's just a couple of sales people that will look into that, will design some condition records, like we call them in the SAP system, and then it is fine. We put some master data in there, and maybe we need to do one or two enhancements, so there will be a developer involved, and that would be it. And then the sales process is fully automated from a VAT perspective. It's the same in the finance process and also in the purchasing process. And in the purchasing process, it's also very often you see that people just train the AP staff to do a manual tax determination, but then you need to again take into account how much would that training cost and how many mistakes would an AP staff make to assign the correct tax determination for that transaction. And after go live, after you have implemented that whole VAT determination solution in the S/4HANA and you actually start transacting in the SAP system, then every new business flow that is being created, maybe you are going to sell new products, and maybe you have a new division, maybe you have set up a new sales organization, etc. That will just be a change request to set up that new division, or to set up that new product line, or to set up a new company code or whatever in the SAP system. But in that change request, there's no special line to say, and this will be the cost for the VAT design for this new business line or whatever. Also, if you register in a new country for VAT, and the VAT costs are also very not specified in a change request. It's very often just also in a change request for this company will have a new factory station, so we need to have a new plant, etc., to set up, and then the VAT costs are just not recognized as such. And also bug fixing, and also VAT rate changes, etc., that is very often not really recognized and separated as VAT costs. So that's what we need to look at today to really calculate what are the actual costs for VAT in the SAP system. What I've done for today is that I have took an example of a company, an EU entity, that has, for example, 5 to 10 factory stations. So we are talking about an implementation in 5 to 10 EU countries. And then we need to look at what would that actually cost, and what kind of a costs are really embedded in the budget of the S/4HANA project to realize what VAT determination actually costs. These calculations are based on interviews that we had with Big Four, interviews that we had with system integrators, interviews that we had with customers, and also own experience. So there's a lot of years of experience in designing VAT behind the figures that I'm going to present. Unfortunately, you can't just take those figures for your own business. You always have to look at your own situation to look at what it actually would cost also in your business. But I'm going to give you some examples of cost per VT rule, what it would cost to design that in the SAP system. So the first part, and that is in a sales process, that should be the first question that every sales consultant should ask you, which is very often not asked, is that who is my legal partner for VT purposes in the SAP system? If I create a sales order in the SAP system, then I'm dealing with many partners in that sales order. I have a ship-to address, which we call the ship-to partner. I have a billing address, that is the address on the envelope where we send the invoice to. That is the bill-to partner. We have a payer who is actually paying that invoice, and we have a sold-to. And which of those partners is now really the legal partner for VT purposes? And we need to know that, because from the legal partner for VT purposes, we extract the VAT registration number, and we also extract the taxability of that customer. Is he liable for VT, or is he not liable for VT? Is it maybe a military, or is it maybe a hospital also that is not really liable for VT? And the VAT registration, of course, is really important if we want to cross the border in Europe and we want to exempt the transaction because of an intra-community supply of goods. Then we need to identify the correct VAT registration of the correct legal partner for VT purposes. Unfortunately, SAP has some functionality in it that will design generally the sold-to or generally the payer to be the legal partner for VT purposes, but there are some fixes that need to be implemented in that system to always determine the correct legal partner for VT purposes. So what does that mean if you need to build that in the SAP system? So what does it mean to design the legal partner for VT purposes? That means that we need to form a team. And first, we need to form a team of about 7, 8 people, which consists of about the VT manager, who is explaining what is that legal partner actually, what does that mean? Maybe you need to also have an external VT advisor to advise you on certain elements of this. Then you need to have an SAP SD consultant, a finance consultant. You need to have a developer, and also the key users for sales and finance would normally be involved. And how do we then calculate what that would actually cost to design that? That is where we need to take some averages. So from all those 7 people that are mentioned here, we say that each team member on average will be involved of 10%. Probably that external VT advisor is only involved for 1%, but the developers may be involved for 50% of his time. So we come to an average of 10% of each team member that needs to be involved. We say about 20 days in a month, and the average hourly cost to design this is about 100 euros. If I talk with peers in my industry and I say I take an every hourly cost of 100 euros, they normally say that's far too low. But I just want to be very conservative in the whole calculations of what it costs to design VT in the SAP system. So if you now do a calculation of just designing the legal partner for VT purposes, then we see that that is relevant for the sales module. We estimate that it would take you about 2 months to design this. You have about 7 people involved. In total, if you take the 10%, that means that there are 28 days involved in this design, and that will cost you around 22,000 euros. So just designing legal partner for VT purposes, 22,000 euros, that is hidden in the budget of your S/4HANA implementation project. If you look at another rule, it's the EU Triangulation, that's very often perceived very complex. You see that we again need to form a team, and I've highlighted the additional members that we now need for EU Triangulation compared with what we needed for the legal partner. You now see that we also all of a sudden need to have an SAP MM consultant to do the purchasing side. We also need to have a developer for maybe an AP scanning solution or a vendor portal or whatever you are using from an external party to receive AP invoices. And we also need to have a key user purchasing. The averages all stay the same, but if you now look at the calculation and you see that for the sales area, we expect that you will be busy for at least 4 months, 8 people involved, in total 51,000 euros. For the intercompany invoices, again, also 28 days involvement, 22,000 euros, and scanned AP invoices, vendor portals, iDocs, etc., etc. Also there, we estimate that you would spend about 25k. In total, almost 100,000 euros to design EU Triangulation in your system. If you look at other rules like a revert charge, out of scope, etc., extended revert charge rules, that is where we are, as a seller, are using our foreign VAT registration number. So if I'm a Dutch entity and I'm using my French VAT registration number to do a domestic supply in France, then I need to apply the extended revert charge rules. Sometimes you are lucky and you can handle that with master data. But that is only if the master data is unique from a customer perspective, unique to each and every sales organization. And that is very often not the case with complex organizations. You very often share certain customers. So you need to design a logic to implement extended revert charge rules in the SAP system. Again, sales, intercompany invoices, and also the AP side needs to be involved in this. You see a throughput time of about 2 months for each module. Again, always the same amount of people will be involved. And then we see that the extended revert charge rules would cost you around 60,000 euros to design that in the SAP system. And you see on the left-hand side, I'm just adding all the cost for this whole design. And outside the scope of VAT transaction. So that means that you don't need to report on this transaction. You will be a middleman in a certain transaction. Suppose goods are coming from the US, the goods will be delivered to Singapore, and you are a German entity that is in between. The US does the export, in Singapore they will do the import, and then the German entity will be the middleman, which is outside the scope of VAT. And also that, to design that, will take you a month, 1.5 months to really automate that in the SAP system. And another 40,000 euros can be added to the cost of designing VAT in the system. VAT groups. Also VAT groups is a functionality that doesn't exist in the SAP system. Again, if you're lucky, you can handle it with the master data. Very often we see that that is not sufficient. So you also need to design something for VAT groups. Doesn't take you as long as a triangulation, for example, but still you need to think about a couple of days to design really a functionality for VAT groups that works in the sales area as well as in the AP area. Another 12,000 euros gone in the budget for the S/4HANA implementation. The default services rules, those were implemented in 2010. And if I go back to 2009, then everybody was in panic. We need to design something new for the default services rules. That heavily relies on having the correct legal partner for VAT purposes in the SAP system. Once you have designed that, and you really are sure that you're always taking the correct legal partner for VAT purposes, then you can also start designing the default services rules. I remember back then in 2009, there was a lot of time spent on designing the services rules, and you saw companies sometimes having a throughput time of more than a year, where I now estimate 1 month. We are now far more familiar with the rules, so now it's easier to design that in the SAP system. But still, you need to spend some time on designing the default services rules, and that again comes to around 20,000 euros. And also all the modules are again involved, the sales, the intercompany invoices, as well as the AP side. Then we come to a very complex one, and that is often forgotten, that we need to do something for this. That is if we are issuing invoices where we are actually selling goods as well as services. And if we are selling goods and services, then we very often have to look at what is the portion of the services compared with the goods, so that we actually say if more than 50% sometimes is about services, then the whole invoice should be treated as services. And if it is less than 50%, then we treat that all as goods. And every country has its own rules around this. In Ireland, you have the 2/3 rule, so not the 50%, but a 2/3 rule. And every country has so his own specifics. Also, to really design that, you need to look at the total value of an invoice. But the VAT treatment is always determined per line item. So suppose you have 3 line items on an invoice, and you need to start calculating if I have more services than goods, then you need to know the value of all the 3 line items of that invoice. That is not how SAP works, because SAP goes line item by line item. the first line item, it doesn't know yet that the next two line items are coming. So that becomes quite complex from a technical point of view to design this rule correctly in the SAP system. Again, also on the sales side as well as on the AP side. And that's why you see quite a high number to design this correctly in the SAP system. A lot of technical resources will go into this, and a lot of testing will go into this to really get this right in the system. About 150,000 euros easily spent on mixed goods and services rules. And then also a very simple thing that people very often forget, you need to have a sequential invoice number range without gaps per VAT registration number. So you can't just rely on the native SAP functionality that designs the number ranges based on the billing type. No, you have to go a couple of levels deeper to really design sequential invoice number ranges in the SAP system. I've estimated around 8,000 euros. Very often you see a little bit higher than that, but also you see some companies where they use an SAP consultant who has done this already a couple of times with other companies, and then it will be quite easy to implement. But still, it's a functionality that you need to design. And if you then add up all those costs on the left-hand side, then you see that the total design all of a sudden is more than 400,000 euros. So suppose you have a budget for your S/4HANA implementation, then probably somebody said maybe there's a 100,000 euros for the VT design, and you're already short of 300,000 euros just to design VT and the SAP system, because it is not clear as from the beginning that you have such a complexity in the SAP system to build this. So you need to realize that. I've taken quite some common rules on the left-hand side. Of course, there are far more rules that need to be designed. The more complex your company becomes, the more rules that need to be designed. But these are the basic rules that should be in any SAP system. If you design it all in one go in the project, so if you really would concentrate on designing VT in the S/4HANA system and upfront already form a team and say we are going to design all those rules in one go, then of course you get an efficiency. You don't always have to start up that whole treadmill to get everything working in the SAP system. You can design the whole functionality, that the developers can start working on that and concentrating only on the VT, and also the testing would gain quite some efficiencies. So we would estimate that you, if you do that in one go, that you are talking about 300,000 euros that are embedded in your S/4HANA implementation. So if you look at the first question that we asked when we started in the webinar, like, is that really an additional cost, or is that already embedded in the S/4HANA implementation? I would say if you implement the tax engine, it's just replacing the hidden cost of the budget that you already have in the S/4HANA system. So it's not really an additional cost. No, we are replacing certain costs that were not visible. So to a CFO, you can say, dear CFO, you don't see the cost and for designing VT in the budget of the S/4HANA system, but it's actually there. And we are now going to try to replace that whole design and taking out, for example, also the risk of incorrect design or delays in the project, because people need to concentrate on VT. We are going to replace that with a tax engine that has already all the functionality in it, and then you are de-risking the implementation project for the S/4HANA. So we talked about some VT rules that we need to design, the legal partner, the triangulation, the out of scope, etc., etc. But what was not included in that whole calculation was, for example, special rules like supply and install rules. There are people that are devoting their whole life in understanding just the supply and install rules for certain countries, because they're really, really complex. So to design that, yeah, you can also add quite a substantial amount to put that into the SAP design. Also specific domestic requirements, like in Poland and in Hungary and in Italy, etc. Digital reporting requirements like e-invoicing, etc. It's all not embedded already in the initial setup cost. Also the basic setup work. So even if you now take native SAP, and you can work with that, or you need to create all those enhancements, you still need to design a tax procedure. You still need to design condition records, invoice layouts, master data you need to look at, etc., etc. So that is all not included in these initial setup costs. That all comes on top of that. And if you're talking about other regions, so we're talking only about the EU, but if you also need to implement something in Brazil and India and in the US and so on, yeah, those are completely different calculations that you need to make. How much would that cost us if we would just use Native SAP compared with a tax engine, for example? And also, maybe you have an e-commerce platform, or maybe you are using Ariba. You have an expense system that is attached to your S/4HANA system. You have multiple SAP systems. Maybe you have an SAP system, an Oracle system, and maybe even also a Microsoft Dynamics system. That all needs to be designed for VAT purposes. That is all not included in the initial setup. So you can see that this could easily explode into a very high amount of money that you need to spend to automate everything from a VT perspective. And then we need to look at after go live. So the yearly maintenance cost of our initial setup in the SAP system. The norm, if I ask around how much would you normally calculate for just normal maintenance, is about 50% of your initial cost. So it would come down to 50,000 euros per year. So let's say half an FTE that you are using just to maintain your VT solution in the SAP system. But again, also there, we didn't include a couple of things like VT rate changes. And last year, I was talking with some very large companies, and I was really shocked about the amounts that they were quoting that they spent on the VT rate changes. I saw amounts of 700,000 euros to 1.2 million euros because they were using 40 or 50 different SAP systems, and they had to apply those VT rate changes in all those systems. And that's yeah, mind blowing, I would say. Those figures I've never seen anywhere else. But those were the reality for those companies to just change the VT rates in Germany and in Ireland. Introducing new countries. So you have now designed everything for 10 EU countries, and now all of a sudden somebody says you're also going to do business in Greece. So in Greece, so we also need to set up VT determination in Greece. That is not included in your normal maintenance cost of the initial setup. Also tax research, often also forgotten. How much money are you spending on external tax advisors to really understand what is changing, which is relevant for your business in the various countries that you are registered in? That's also costing you a huge amount of money, not only internal people that are doing tax research, but you also are spending a lot of money with external tax advisors to really understand what is changing and what is impacting my design for our business to stay compliant for VT purposes. And I also made a couple of assumptions. The first assumption is that if you are building the solution in the SAP system, that you have built that in a more flexible, future-proof way. Unfortunately, what I very often see if people build VT in an SAP system, then they are only concentrating on the current business cases. So they see a certain business flow, and based on that business flow, they put some coding in the SAP system. If this and this and this happens, then this should be the VT treatment that comes out of this flow. That's not a future-proof or flexible design. And if you build it like that, then you very often see if you then introduce changes to the legislation or introduce new countries and so on, then you are going to build something on top of that because it's not flexible enough to just absorb also the new legislations and new countries. So that is adding far more to your maintenance costs if you didn't build that in a flexible future way. Also an assumption is that the initial build team is still involved. And that's very often not the case. Very often you see that the design was done 10 years ago. Now you are implementing S/4HANA. You want to redesign. You want to use your old design also in the S/4HANA system. But that doesn't match one-on-one. So you need to put that into the S/4HANA system. Then the original build team is no longer there. So also there you need to add some more cost into your budget to maintain your system, because you first need to figure out what was the current solution, how does it actually work, why is it there, and how can we change that if we can change it. And also the documentation, of course, that needs to be of a high quality to really understand what has been built. And those are assumptions that are not always realized in most of the designs. That's something that you really need to look into. So that brings me a little bit to the end of this webinar. We have a couple of key takeaways, a couple from Peter. I don't know if you want to take your own takeaways for the audience.
Yeah, that's fine, and they can also listen to me again. And what I would also like to basically re-emphasize is that the calculation that you just shared is actually a calculation of the costs of an alternative to a tax engine. So it's not the cost of a deployment of a tax engine. It's cost. Okay, what would it cost if you do everything in your native or your new S/4HANA system?
Yeah.
And yeah, if I reflect back to, let's say, the key takeaways from my initial slides, it's well, okay, it's important to really understand your stakeholders, understand their agendas, know who they are, and how you can match up with them. It's also understand, let's say, really the need for tax automation, dealing with incidents versus dealing with systemic issues, and have a very clear understanding of your business and of your business processes to see, well, okay, what can you automate? What should be outsourced? What can you solve with people? And what can really be solved with automation through a tax engine, as an example.
Yeah, and then on my side, I would say really realize yourself that VAT costs are not always visible. They are very often hidden. There's a well-kept secret in your organization how much VAT actually costs. So really look at that, make them visible so that everybody understands what does it actually cost to implement VAT in the SAP system if you don't use a tax engine and you are doing that with native SAP. And then once you have made them visible, then of course it becomes also obvious that a tax engine is not just an additional cost on top of your implementation costs. No, they are replacing the hidden costs that you already are making to do a native SAP implementation. And also maintaining your own designed VAT determination solution that very often is not visible. It's all hidden in change requests and so on, change requests to set up a new entity, change requests to set up a new country, etc., etc. And you don't see a real budget for VAT determination, but that is actually not free of charge. People are working on this, and FTEs are spent on maintaining your VAT determination solutions in your SAP systems and any other ERP system that I can imagine, of course. I think that brings us to the end. I see that we are just 2 minutes before. I want to give Sarah some time to also close off. Sarah, over to you.
Yep, that's great. Thank you. So yeah, we don't really have too much time for Q&A now, but if you do have any questions that you would like Peter or Roger to answer, I know there was a lot of information here. I just want to put their email addresses up here. It will be on the screen on the slides as well. And just to let you know, we have a few other things coming up, and we're doing quite a lot of content with Vertex this year. So we have a few webinars coming up, but I also want to draw your attention to Vertex Exchange. Vertex have a great event coming up April 26th in London. You can find more information on their site as well. And we're doing a survey to help better understand where these compliance risk hidden costs might actually sit in your organization. So we'd love if you could take part in that as well. Again, thank you so much for staying on the line today. We'll be taking a look at the people who are still on the line now, and our CEO, Susie West, will be in touch to see if you're one of the lucky listeners who want to give a donation to charity in the name of your choice. So again, I just want to thank you again, a big thank you to Peter and Roger. Again, such so much knowledge in this webinar, and really want to thank everyone on the line today for your participation in the polls. So thank you so much for tuning in. Thank you, Peter and Roger, for all the work you've put into the presentation. We hope it's helped you. And again, please feel free to reach out to the team at Vertex for any further questions you may have. So with that, I would just like to say thank you once again, and we hope to see you at one of our forthcoming webinars or events. So thank you all, and goodbye.